Okay, let's talk about something that governs pretty much the entire financial world. We're going to crack open the rule book, this kind of hidden system that lets us understand, and maybe more importantly, actually trust the language of business.
I mean, think about it. When you look at a company's annual report, you see their profits, their debts. How do you really know those numbers are real, right? How can you trust them enough to actually make a decision based on them?
Just for a second, picture a world with no rules for this stuff. Every single company just makes up its own way of reporting numbers. You'd try to compare two businesses and it'd be impossible. It's not even apples and oranges. It's like comparing apples to oranges that are also claiming to be bananas. It would be just total chaos.
So, yeah, to prevent that kind of chaos, the financial world really needed a foundational set of principles, a common language that everyone could agree on.
And this is the solution. It's called the Conceptual Framework, and it comes from the Financial Accounting Standards Board, or FASB for short. Now I know, that sounds super dry, but don't think of it as just some boring document. I want you to think of it as the Constitution of Accounting.
Okay, but here's a really crucial distinction. This framework, it isn't the book of specific laws. That's something else, a system called GAAP, Generally Accepted Accounting Principles. Instead, this constitution we're talking about, it sets up the fundamental philosophy, the big ideas that all those specific GAAP rules have to follow. It's the why behind the accounting what.
And if we stick with this constitution analogy, we can really start to see how this whole system of financial trust is actually built from the ground up.
All right, so what does this Constitution actually do? What are the core principles it lays out for everyone?
Well, it really boils down to answering two fundamental questions. And the first one sounds so simple, but is actually incredibly profound. What are we actually measuring? And that one question immediately leads us to the core elements of any financial statement. These are the absolute basic building blocks of a business.
Okay, first up, an asset. So the official definition is a present right of an entity to an economic benefit, which, sounds a bit formal. But in simple terms, it's something a company controls right now that's going to provide some kind of future value. We're talking about cash, a factory, a patent, that kind of stuff.
Then you've got a liability. The book says this is a present obligation of an entity to transfer an economic benefit. Basically, it's what a company owes now that's going to require them to give up something valuable later on. The classic example is a loan that it has to repay.
And that brings us to the third piece, equity. This is the residual interest in the assets after deducting its liabilities. And what that really means, simply put, is it's what's left over for the owners after all the debts are paid off. It's the company's net worth, the bottom line.
So this really gets to the heart of it, doesn't it? The Constitution draws a super clear line between what a company owns, that's its assets, and what a company owes, its liabilities. And you know what? Almost everything in financial reporting flows from getting that fundamental balance right.
Okay, so that covers what we're measuring. But that just leads to the second and maybe even more critical question. How do we make sure that all this information is actually useful and trustworthy?
Well, the framework gives us what you can think of as two pillars of trust. First, is it relevant? In other words, is this information capable of actually making a difference in someone's decision? And second, does it have faithful representation? Which is just a fancy way of asking, does the number on the page truly reflect what's happening in the real world, the economic reality?
And if you want to simplify it even more, just ask these two little questions of any financial data you see. Does it matter? And is it true? If you can answer yes to both of those, then the Constitution says you are looking at useful, trustworthy information. Simple as that.
But here's something that's really important to remember. This Constitution isn't carved in stone. Not at all. It's a living document. It's constantly being debated and challenged and hopefully improved by experts in the field.
Take this, for example. This is a quote from a dissenting FASB board member. She's on the board, and she's basically arguing that the way they currently define income can force companies to report stuff that investors don't even find useful. It's a really cool peek behind the curtain at the kind of high-stakes debates that are constantly shaping these rules.
And look, this isn't just a US thing. This is a totally global conversation. You've got organizations all over the world trying to hammer out a common language, especially for huge new areas like corporate sustainability reporting. That's a big one right now.
So, at the end of the day, why does any of this matter to you?
Well, it's because this Constitution is the absolute foundation of trust in the market. It's the whole reason we can even begin to compare different companies and feel confident making smarter, more informed financial decisions.
We have spent decades building this pretty incredible system of trust just for financial data. But that leaves us with a really provocative question, doesn't it? What should the rules be for the data of the future? I'm talking about a company's carbon emissions, or its data privacy record, or even the societal impact of its AI. That is the next Constitution, and it's being written as we speak.